Right, so this lesson's called Chart Like a Pro. I'm going to show you how to mark charts properly with all relevant price levels and zones. Let me share a quick story with you. All these price levels and areas of interest are extremely important to identify where you'll enter your trades and where you'll exit. A lot of the time you want to get out of the position before, say, a price level or price area, or on the flip side, you might want to enter once one of them is broken. So here's a step-by-step guide on how to mark charts. Now, step one, we're going to go into the hourly time frame and we're going to mark our pivot points. So what are pivot points? Pivot points are essentially areas where price flips. So say price is going up and it flips down. Price is going down, flip up. In this case here, we can see price is going up. Boom. Pivot point pivots down. So this here is a great example of a pivot point. We'll keep going. Price goes down, big shift here. So we'll mark this with a harsh black line. So again, price was selling off, hit a low here, pivots, flips, starts trending up again. Now, yes, we could mark this as a pivot point. That is correct. And we can mark this as a pivot point. Now, the only thing is, once the pivot point is broken, we'll remove it. So once that price level is broken, we'll remove it. Just get rid of that. Again, we could mark this here, but then it gets broken right here. Okay. We can mark this as it's still active. And now we can mark this as it's currently populating. Okay, perfect. So they're pivot points. Now, once we've marked our pivot points on the hourly, we're going to mark our supply and demand zones on the 15-minute time frame. So we head down to the 15-minute. Again, these are valid price reasons where, for example, in a demand zone, there's lots of buying pressure. And on the flip side, in a supply zone, there's lots of selling pressure. So usually the way we would mark these is if we get 3 momentum candles. So a momentum candle is a big bullish candle. Once we get 3 of them in a row, the last candle before that, so say for example, if it's a demand zone, we'll get the bearish candle here and you get 3 momentum candles. Or on the flip, it's a bullish candle here and you get 3 momentum candles going down. So here, for example, you've got your 1, 2, 3. So then we can mark roughly this, something like that, and we use green for our demand zones. And straight away we could see how we had our demand zone here, then price went into the demand zone here, so we had a downtrend going here, price went into a demand zone, broke structure, and we flipped off it. Say for example, if you were in a short here, you would have set your take profit around here and you would have got out by then. Now we look at this here, so we can mark this as our supply zone. We got the 3 momentum candles going down, so price sold off here. So say for example, you thought that you can get a buy here, well you would just avoid it. I'm joking. Now again, this looks like, so we mark this supply zone. Price went into our supply zone, broke structure again, and continued down. Now I'm just showing you quickly how they work and how to mark them. And every day you'd mark these in your pre-market routine. I'll just quickly put on the sessions indicator just so I can show you where sessions are open. So this was our London session yesterday. London, New York, Tokyo. So for example, say if you're trading London session here, you would have marked this as it developed. You could have taken this short. You would have had this marked then. Say if you traded the London session today, you would have been able to take this trade, take it long. Step number 3 is pretty simple. It's just our pre-market highs and pre-market lows. I would have traded yesterday. We take our London high. So our London high would be about here. So it's literally the highest point of London session. So you can see, you can mark it here. And then we'll take our London low, which is just down here. And it's also a pivot point. That's basically it. It's very straightforward. We use a dotted black line to mark that. A lot of the time as well, say if we have a tight enough range within these pre-market highs and lows, we'll mark this area here as our no trade zone. So usually we'd either wait for price to break this, look for longs, or price break this, look for shorts. Step number 4 is once we're trading, we're going to mark any fair value gaps, either 5 minute or 1 minute as they form. So for example, there's one here. Now what is a fair value gap? Let me zoom in. So a fair value gap is where price leaves an imbalance. I'm going to try to keep this as simple as possible without getting too detailed, but it's where price leaves an imbalance. Basically price leaves a big gap. So we have a wick here and a wick here. And price just had a big push up. There's our imbalance here. That's the fair value gap. These can be used for entries or if they flip. So for example, if price goes something like this off the supply zone, flips, we'd be able to take a trade here. So not going to go into detail on the setups in this lesson, but we take a trade like this, for example. So we cover the top of the fair value gap and we target something like that. Nice, easy, low risk trade. Now finally, step number 5 is our Psyche Levels. So over here you can see we have 600, we have 650, 700, etc. So we don't mark these, but we're always conscious of them because they're quite pivotal in our system, where anytime we get to a Psyche level, price will usually reject just before one. So for example, say if you're taking a trade and price is going to the Psyche level, your take profit will usually be a couple of points beforehand. On the other hand, say if price breaks that level, you could use that as an entry then as well. So now this is kind of an example of what your chart would look like after you've marked your levels. So we'll just go into the hourly, for example, and see here, this would have been how it would look like in our session yesterday. We would have had a demand zone here, a supply zone here. We would have had our pre-market highs and lows, and we would have been focused on our pivot points. This would have been a great trade to take yesterday if you were trading London session. Now I only trade New York session, so I would have missed that. This is just a straightforward system to mark charts. So then every day you'd have something like this painted, where you look for a certain... Oh my god, I don't know if you heard that, bro, but that was a massive thunder. Now a couple of people in our Discord have actually implemented this just for their TP strategy. They were able to add upwards of 10% to their win rate, which is phenomenal, by simply just targeting just below the levels or points, or entering just off them. So now just to recap, now you know how to make pivot points, supply and demand zones, pre-market highs and lows, fair value gaps, and then you know what are Psyche levels. Let me know if you have any questions, and also if you want me to show you how to set up the chart like this, these colors, everything like that, just hit me up. It's quite easy to do, and it's just a bit more aesthetic and easier on the eyes, especially because I trade at night, so I need kind of the red and black, whatever it is. It's a bit dark for me, whatever. Yeah, hope you enjoyed this, and I'll talk to you soon.